We've long had a flexible inflation target, and I think that's served the country well. Yep. Inflation moves up and down, but we really want people to be confident that when it's away from that target range, it will come back. Yep. We're not kind of specific about kind of needs to come back to an exact number, but we want you to be confident, we want the community to be confident that it will come back to average 2 point something. Yep. Yep. And I think that's the right framework for Australia. If inflation stays high, we're going to feel a lot of pain. The whole community will hurt. Inflation's corrosive and it hurts people on low incomes the most. Yeah. So we've got to get inflation back down, and I know that it is difficult in the short run, but what we talked about at our board meeting yesterday is if we were to avoid this difficulty in the short run, we will have a lot of pain in the medium term, and that will end up being more costly for us all. So I know it's difficult, but we need to get inflation back down, and we're really committed to doing that. And yesterday's decision demonstrates that. We had been prepared to have a slightly slower glide path back to the inflation target than some other countries, because we really wanted to lock in, if we could, this once-in-a-generation improvement in the labour market. So our inflation forecasts have inflation returning to the top of the target band in mid-25. Other countries were getting there earlier, and we were comfortable with that. So that was one factor. Another factor was that Australians pay, most Australians have variable rate mortgages. I mean, in the United States, when interest rates go up, if you've got an existing mortgage, you don't pay any more. In Australia, you pay more kind of within a week or two. So we've had in Australia, a very big hit to household disposable income from higher mortgage rates. That doesn't happen in other countries. So that's one reason we think that interest rates perhaps don't need to go up as much as they do elsewhere. And the third factor has been that nominal wage growth in Australia was lower than it was in most other countries. Measures of wages in the US and the UK have been running at close to 5. They're lower here. So they're the three factors that have led us to have lower interest rates than the rest of the world, and if any of those factors change, then we would have to reconsider. You asked about use of quantitative easing, or maybe perhaps quantitative tightening. Now, it's clear in retrospect that the central banks and the fiscal authorities did too much during the pandemic. I think that's pretty clear. But when you think about that, I just invite you to go back to those days of the pandemic. It was scary. We did what we thought was the right thing at the right time with the information that we had. We wanted to do everything that we could to protect the country from the economic effects of the pandemic. We did that, and at the time we were doing that, we thought a vaccine would take years to be developed, the restrictions would last for ages, and it turned out the scientists developed vaccines in record time. We all got vaccinated and life returned to normal more quickly than any of us, or at least certainly I expected, and that was the advice that we were getting as well, to take ages. So we did what we thought was necessary. In retrospect, we did too much. Now, with interest rates away from the lower bound, our view is that interest rates remain the tool for monetary policy, and quantitative tightening isn't really an effective monetary policy tool when you can use interest rates. So the focus for us is very much on the cash rate. There hasn't been any shift in our tolerance. We want to get inflation back to target within a couple of years, and that hasn't changed. I think what has changed over the past couple of months is our assessment of the risks. And it's not just the wages data. The inflation read for April was higher than expected. We've seen housing prices rising again when we thought they'd still be falling. And when we look overseas, we see a lot of persistence in services price inflation, largely again because unit labour costs are rising quickly. And there's been a lot of a strong correlation between inflation developments abroad and what happens in Australia. So upside surprises on inflation, upside surprises on wages, upside surprises on housing prices, upside surprises on inflation overseas. We felt like we couldn't just sit idly and say, well, this is just all accidental, it's all just noise. The conclusion we reached was that this represents upside risk to the inflation outlook in Australia. We have been prepared to be patient in getting inflation back to target, but our patience has a limit. and the risks are starting to test that limit. So we thought we needed to respond after holding steady in April.